Hi, this is Manish Gunwani, Head of Equities at Bandhan Mutual Fund. Today I would like to touch upon what is business cycle and why must one invest in it through this video. Business cycle refers to the ups and downs in the economic activity of a country. An economy goes through four phases: expansion, peak, contraction and slump. Each phase gives rise to these sectoral opportunities to capitalize on and invest in. Business cycle investing aims to identify opportunities to invest in based on the current cycle of the economy. Let's try and understand the phases through an example. India's long-term GDP averages at 6.6%. Typically, it can be observed that the economy has experienced expansion phase where growth has been significantly above the average and contraction phase when below this average of 6.6%. Like cyclicality in economic activity, market movement, returns, earnings and valuations also move in cycles. Phases of the economy affect the equity market in more ways than one. Now coming to why one must invest in business cycle fund. Macroeconomic parameters like economic activity, credit growth, capacity utilization, capital expenditure, etc. behave differently in each phase of the cycle. As a result, the sector to go overweight or underweight on may vary. For example, when the economy is in expansion phase, the activity is rebounding, credit growth is on the rise, capacity utilization and earnings of companies starts increasing. Interest rates are low and more people are getting jobs. During this phase, sectors like financials, metals, real estate may do well. On the other hand, sectors like IT, pharmaceuticals, FMCG, etc. may not do well. Each sector may behave differently in each year. Thus, winners and losers may keep changing across different cycles. To quote an example of how economic parameters affect the market and sector, we can take the example of Nifty infrastructure. The central government capex from 2010 to 2020 grew at a modest 6.5% CAGR. However, between 2021 and 25, the capex jumped at 22% CAGR. This led to strong upward movement in the sector and the infrastructure index. A strategy like business cycle can aid in anticipating and respond to economic shifts and accordingly adjust sector allocation and exposure to optimize returns and minimize risks.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.